And good morning, everyone. How is everyone doing? Hope everyone had a relaxing, longer weekend. Happy Easter Monday. Remember, a lot of the world is still closed down, including Canada, because they get to celebrate Easter Monday, but a lot of Europe, so it's quieter trading so far today. Good morning, Donald. Good morning, Christo. Good morning, Patrick. Good morning, Jacob. Hope you get out of your really bad trade. I hope you can finagle your way out of it. So let's see where we sit. We have a quieter day today. We got wholesale inventories coming out in about 55 minutes. Forecast to be slightly up over previous. So previous was a down 0.3%. This forecast to be up 0.2%. Then we have consumer inflation expectations expected to come in slightly. So we'll see how that goes. And that's at 10 a.m. Central, 11 a.m. Eastern. So an hour and a half after the market opened. We got some bill auctions. Then we got Williams' speech. This is the first real Fed speech since the payroll report on Friday. So, what else is coming up this week? Not much tomorrow, besides Kashkari and Harker speaking. Kashkari in the evening, Harker in the afternoon after the cash, right at the cash close, technically. But Wednesday, pay for attention. So we could be in some interesting market conditions at least through early morning Wednesday because we got the CPI. Remember, Friday was the non-farm payrolls, and that's the last one before the Fed next whatever they're gonna do, pause or hike one more time in May. This will be the last CPI print. Before that, also now CPI market. It's more important to the markets than the Fed, but you know if it comes in hotter than expected, it's still going to be interesting. So I mean, it's not expected. The core inflation month over month is supposed to come in a bit, but still 0.4 is pretty hot. Remember, 0.4 on an annualized basis is 4.8%. So we got PPI on Thursday, and on Friday we have retail sales. So, and Michigan inflation and consumer sentiment. So we got a lot. It's backloaded to the end of the week. Good morning, Sterling. Good morning, options 22. So Monday, Tuesday are very quiet except for some minor Fed speak. You can see so far Tesla getting a little hint. But what about their mega packs? A bit mega caps down. Not a lot of green. Some minor and some industrials. If you look at the groups, let me just refresh this real quick. You have technology, communication services, and consumer cyclical leading the charge down today. Only thing up is real estate. Fed watch. Refresh this one more time. Let's just refresh this just to see. Right now, 71% for one more rate hike. If we look at our probabilities, it's pricing in a 71% for either May or June. Then they have the cuts. Well, there won't be cut. If they're hiking one more time, there will not be cuts in July. But we'll see. It's still now watching for that one rate hike. Fear and greed still in greed mode after Friday. By the way, the current market valuation for people who think, it's fairly valued, it's at the way upper end of fairly valued. We're not. By the time this is over, we're going to see fairly valued down at least in this, if not undervalued. That's my thoughts. But who cares about my thoughts? We're in negative gamma. Gamma flip is 41.80. Right now we're trading 41.07. So, especially on sell-offs, we can get some amplified moves to the downside. There's not still. There is some minor put presence below 4,100, so I am paying attention to 4,100, and then there's not much until 4,000. So please keep that in mind too. In terms of earnings, this is also important. I mean, today it was nothing before the open, really, Tilray after the close. Tomorrow, CarMax, Albertsons will be a little interesting from an inflation point of view. So this is a supermarket chain. So I will still check in on that. Wednesday, all quiet. I mean, there are some things, but all quiet. Thursday, we got Delta, which will still be interesting from a large regional airline, or a large national airline, I should say. Infosys, Progressive, Fastenal. So that somewhat gets it going. Nothing after the close. And then Friday's big. JP Morgan, UNH, United Health Group, Citi, Wells Fargo, PNC, BlackRock. So we got some banks and a big health care all reporting on Friday, along with retail sales. So Friday, again, backloaded, kicking off with Wednesday CPI. Good morning, Anissa. The market is open. The futures have been open since last evening, and the stock market is open in the U.S. We had, by the way, we had low volume. If you look at Friday, very low volume on the little reversal off the rotation zone so far today, wiping that back down. Just we've been in low volume mode for a while now. I'm paying attention to Friday's low. It'll be still lower volume today, most likely, because Europe has been closed. So we had a little gap up last night, but so far filling the gap with the futures. I am focused on the low of 40.9650. Right in here, we're coming into major support. Remember that 4100 area. So unless we start really breaking through Friday's low, then I'll watch for starting for the bigger pullback, but don't ignore about 40.75, and then the major area would be about 40.50 to about 40.58. This is still thin trading, so it's just my advice is to, if you have a strong signal, great. If not, let today play out. I even let today and tomorrow play out, and let's go into Wednesday, because I'm watching this also from the bigger perspective. Weekly cycles now at the top, daily cycles getting to the bottom. I'm going to be interested to see what happens when we get cycles back in a top area. Okay, we could see a slight little bounce before the next major rollover play, but I am paying attention because we can start a rollover play. Technically, daily cycles are not bottoming yet, and weeklies are at the top. So it'll be interesting to see how this plays out. Keep in mind, your major support is back at this 40.50 level. Major technical damage starts happening when you get key closes below 40.50. Because then you've nullified the most recent breakout, and this resistance area from end of January, beginning of February has held still as a resistance area. If you take a look at the bigger picture, that level held in mid-December, so far held in February, so far holding in beginning of April. And it's gone a whole bunch of nowhere, just back and forth, with slightly higher lows, but we have not yet made a higher high yet. So the NASDAQ, we start getting some technical damage below about 12,850, because that's where that was the highs at the beginning of February that then we based along at the end of March. We broke out, and now we're basing above that. Again, cycles getting to that bottom area, but not yet bottoming. So we start getting really below this about 12,850. And the highest close was from February 2nd, 12,846. So that's where I'll be watching on a closing basis. Until then, just today, I'm keeping an eye on Friday's low. By the way, back to the S&P real quick. I'm not looking for anything majorly bullish unless there's a bottoming pattern in here that comes in, which we don't obviously have yet, or we start getting above about 41.35. The NASDAQ, not interested unless we get a bottoming pattern, which we, again, don't have yet, or we get above about 13,200. Other than that, we're still holding the rotation zone. We're dipping back into it where we got buyers on Friday. The Dow, My major support area is right about 33,450. We start closing below about 33,400. That's where the technical damage starts. And I'm not expecting that to happen today. There's a plenty of support in the Dow about 33.5. Again, not anything substantial bottoming yet going into the open. We do have some clear path moves to possibly reverse. That's what I'm into, but can't get overly bullish until we get above 33.7. Not just for today. Russell, I'm paying attention to 1750 area. We break below 1750, 1737. Again, bullish mode would be above about 1782. Otherwise, not much. VIX, a little elevated. We'll really start sitting up and paying notice if we get VIX start going with some momentum above 20. It really needs some momentum play. DAX is not going on real today. The notes, we had again, the big gap down. We had this little double top area, which finished with the gap down. By the way, on the futures, the massive double did not trigger. Remember, on the 10-year, on the yield, the micro yield, which is not as important as the futures. I mean, this is a futures contract, but they're really the 10-year full contract future is more important. So yes, this did trigger against the 50, but I am watching for the full 10-year T-note futures to trigger, which it did not on Friday. That's the one that will really get me interested in price action to the upside for the notes and the yield rolling over. But this 10-year, we can get a bounce up without ever invalidating this pattern. So I am expecting this to roll over longer term and continue lower. The 10-2s based off the futures still stuck at this minus 50 area. Dollar index. Moving on, I'll be starting up to really get notice if we get close above 102.40. That would be above the rotation zone, and we're getting some divergences down here. Lower low price action, higher low RSI, cycles heading towards the top, but we really need that close below 102.40. Then I'll watch for some kind of pullback and then a possible retest of the 50 and this breakdown zone. So which would be interesting because then we get some more potentially pullback in the markets with a stronger dollar. Other than that, major support coming in at about 101.80. Crude still holding up from the gap. Still watching that gap low from last Monday, a week ago. Low of 79. Other than that, so far this is trying to correct with a sideways move. If it does break out, the key level is 83.95 is the next key target higher for me. Natty gas, nothing, just still chopping back and forth in this area. Remember, the double got turned into a triple. That would be a very forced trade at this point. Gold back to the rotation zone, just keeping an eye on this 2000 area for major support. Copper, not much. Expecting another move at copper at some point, but not much. The 10-year, by the way, the new head of the Bank of Japan said no real changes in policy. A lot of people were waiting on that. So we should see, I'm expecting this to retest that 50 peg limit. 50 basis points, and with the no change in policy, moving up. Watching to see if we close above 133.75, which would trigger a double bottom play and a potential return to the area of the 200. So that is something I'm paying close attention to. The euro with the strengthening of the dollar, a little pullback, holding the last major support area from the breakout. If we start getting a close below about 108, then I'm going to start focusing on a bigger pullback in the euro. With the pound, Looks like it's going to close in the rotation zone and could not hold key support. So I'm starting to watch for a bigger pullback in the pound also. Bitcoin still caught in sideways mode, nothing there. Tesla, we'll get the spiders and the Qs in a second. Looks like I'm paying close attention. If we start breaking below 177, there is a potential gap fill to 174.48. And we still have the mega double top in place. Anything to the bullish side would be to a gap fill of Friday. But first, I'd watch for the opening price of 183.08 would be the first target to the upside. And then 185.06. The spiders and the Qs. You still have 405.55 on the downside. And then below that, I would keep an eye on 404.65. There is still a gap left behind. And that's not just for today. For this week, if we stick in bearish mode, the next key target would be 403.70. To the upside, I would watch for the open on Friday. 406, we're right. What was the open? We're right there technically. Never mind on that one. The next, let me jump down the time frames. The next key area would be about 407. 407 and then 407.70. To the upside for the Qs. The Qs, which finished the double on Friday. Obviously, the first target, we're trading 315.24. The first target I would be utilizing here was about 315.95. To the downside, we still have a potential little gap left behind at 312.72, which is close to Thursday. Why does that say? Oh, it wasn't open on Friday. Duh, the futures were only open. I'll be watching Thursday's low of 312.82. Confused myself there for a second. On the upside, 317.50 on any rally, and then the gap fill to 318.10. Morning, John. Especially since the yield is the micro yield contract. But long term, I'm expecting a longer term pullback in the notes. It's just the timing of that's going to be very interesting with the Fed. Can I cover SQQQ and XOM? Let me get XOM. Exxon. Remember, the key major support is back at about 113. We break below 113, I'll be watching for the gap fill. Other than that, 113, 113.20 is key, coming back into the breakout area from the gap up last week, Monday, Tuesday, Wednesday, Thursday. And oil's still holding up. Now, cycles are rolling over. Now, would that be long-term bearish if we close below 113? No, it'd just be for a gap potential, at least a partial gap fill, pullback in the rotation zone. Oil could stay very elevated. Ken wants the SQQQ. SQQQ. Again, you're going to need this to really kick in with the CPI. Short term, I'd be watching 31.35 area. We start getting momentum above 31.35 with the rest of the markets rolling over and market internals getting poor. The target would be 32 to 32.28. Other than that, you're still trading against the rotation zone. Your key support, your very strong support is about 30.25. If it starts breaking down below 30.25, we'll probably retest those lows. Other than that, you can see here, bigger picture on this QQQ. It's got to really get a close above the rotation zone, which right now is 33, before it can really get a run on. Why? Because this is the breakdown area. You're trading against the rotation zone. You see the last little pop, rotation down. Rotation down on Thursday. So far, just slightly elevated. The intraday breakout area is, again, that 31.30. And silver, I saw silver. Silver, just watch right now your major breakout area. It's about 24.45. Okay. $24.45. That's the key area on a pullback. You start getting close in that. That's the way I watch for the bigger rotation zone, but we have a lot of major support. The only thing that does major technical damage at this point is back below about 23.20. Other than that, any pullback comes back into support. On the breakout levels, these got shifted. On the breakout levels, and you see you're sitting here at the high support, which was tested back at 2nd of February. You're trading right against that. Your next, just seeing if we have any great targets. Just use the forward harmonics right now, or the prior major forward harmonics are these for the short term. Let's see, I'd use 25.69 to 25.96, and then your major target area on a breakout. So far, it's just a sideways correction. Major target area would be about 26.60. However, this does need a pullback. This does need a pullback. And on any pullback, would not be worried again unless we close below 23.20. The move is not going right now. I'm still stuck here. I wish it was going. Amazon. Your major support area is your 97.50s. Other than that, by the way, you still have a gap left behind in Amazon to 97.24. So on any bearish breakdown play this week, I'd be really watching for that on a shorter term basis. On any rally, you have pretty strong overhead resistance at about 104. But if it breaks above there, 107.50 if we get in a bull mode. All right. That's where we sit. Again, my advice with still quieter holiday trading. Yes, all the markets are open in the U.S., but it is quieter not only because Europe's still closed. You had just things like Australia, Canada's closed. But we have this week is really back end loaded, starting with Wednesday. So don't get caught up with stuff. Also, we could sit in a choppier mode back and forth going into Wednesday morning between today and tomorrow. So keep that in mind. You're welcome, John. Thoughts on MO? This is just trading in a choppy, huge mess. I still, this is just going to take a while to play out. I don't have any real thoughts. It's still dividends strong. It's just a strong dividend play. I mean, I don't mind if it just sits here and takes a whole year to play out. It's not overvalued. P to E is 14, and you're collecting an 8% dividend. So anything in this area trading against the 200 again. And it's just not doing much. I mean, this is something you don't even care if it doesn't do much because of the 8% dividend, and it's very fairly valued. So do I have any other thoughts? No, besides it's got a minor bullish bias to it because of the patterns. NASDAQ bull flag or double top on the daily. A double top has not, it needs to rally. It needs to get to 13,250 before we get a double top potential. So far, I would call this a sloppy flagging pattern. It's a very sloppy flagging pattern. Again, just watch. This breakout area is what you want to keep an eye on. You see the bottom of the rotation zone and the breakout area. As long as you don't get the close below this area, it's still just an ordinary pullback. You're welcome. All right, with that, we're going into the open. Again, key is don't do stupid today. By the way, if you're watching for something off the open, about 41.10 with momentum, you have a little breakdown clear path from earlier. Let's just see where the tick opened. Tick opened, hit the minus 1,000. So some moderate selling pressure into the open, but if this can't really start breaking down, I'll be watching for a little minor key support holding in. Remember, we got that major support area just below the market. Even on a push lower, it's coming into a major support area. All right, I'll be back after the close. Thank you, everyone, for tuning in. You're welcome, Anissa. You're welcome, Donald. You're welcome, Richard. See you all. And I will see everyone later this evening. Bye for now.